Okay, good evening, guys. I think it's been long ever since I did this particular stuff publicly. I've only been having backtesting sessions with my private students and thereabouts, but here we are again. I want to, make you guys feel that connection. So the in case you're confused, I use ICT concept. I treat with ICT concept. Now you can have your own personal thoughts about it. I don't care, but that's what I use to trade, and that's what's been working for me. And whatever I'm going to be backtesting here is mainly ICT concept, not SMCY Curve or the rest, as many as they could be. So I'll be using ICT concept, and I think those who have been following me for a while now will be familiar with some of the terms I'm going to be using in this video. But if you're not, just make sure to go to my YouTube channel and start from go check my playlist. There's a course there, free course on the playlist where you can actually start to learn how to trade from a complete beginner, right? So now this is our chart. This is our current chart. I think this is the 4 hour time frame, and we are looking at we want to backtest. Let's see the previous 2 3 weeks. Let's see what because if you want to backtest this past week, there's nothing much there. I only had one trade this week, and that was on Wednesday because it's NFP week. So I don't expect much probability on the in the market. I don't trade NFP week on Monday, Thursday, and Friday. So I only look for opportunities on Tuesday and Wednesday, of course. So there was no setup for me on Tuesday, but there was a setup for me on Wednesday, right? So these are for our time frame. But what do I tell my students? When you're looking at the chart as a trader, first you start from the higher time frame in order to figure out what to do. You don't just go to the lower time frame and start looking for a breakout structure because some people do that. You go to the lower time frame, start looking for breakout structure or start looking for supply and demand, order block for you to trade from. That's absolutely wrong. First, you need to find out your bias. Now you can find out your bias from the daily time frame, or you can do that from the what from the far time frame. Now, if you see, if you know very well, you know me very well. I mainly trade Nasdaq, right? And for the past, is that many months, 6 months or thereabouts, we've been on a bullish trend, an uptrend ever since price dropped this low in towards the end of October. Price have been in a very strong bullish trend. But as you know, the rule of trading or the rule of technical analysis as a whole is that whatever goes up must surely comes down. Whatever goes down must surely go up. So the chart cannot remain on a single trend forever. It will at some point retrace to a discount or just pull back a little bit. Now, looking at the daily time frame, you can see there's nothing actually. I cannot. This is the tip I want you guys to know. You don't use the daily time frame for daily buyers. I don't know if maybe I've been doing it, but no problem. You use the daily time frame for a weekly bias. You use a weekly time frame for a monthly bias. You use the 4 hour time frame or any time frame higher than that for the daily bias. You're trying to figure out the next candle. You cannot just look at these candles and try to figure out what the next candle will do. It's close to impossible. But you can look at these candles on the daily time frame and figure out what the next week will do. It's logical, right? So you want to figure out what the next week will do, like what the coming week will do. You can see that at this point we've dropped into a daily order block, and since we are bullish, we are expecting two probabilities. Either price respect this order block and target the buy side liquidity here, or price breaks downward and create a market structure shift. Those are the two probabilities we are expecting for next week. And that's next week as a whole. But if you are expecting what the next day might possibly do, or the next week thereabouts might possibly do, there's a catch. I have not released this particular lecture publicly, but I'm going to use it. Right, I'm going to use it. I have an unstable internet connection, but manage that. I'm going to use it. So on the 4 hour time frame, what I look at now, I have a pre-trading, I think pre-weekly game plan. Those of you that are in the private class, what I'm talking about is a pre-week game plan. I call it my edge, my weekly edge, right? You know that first before you go into the chart, before you go into any week or before you go into a day, you must have a pre-game plan. What do you want to see? What are the probabilities you want to see in a new week or the probabilities you want to see in a new day? So I have this thing I want to look at now. Looking at these things to tell me if next week is going to be bullish or if next week will be bearish. Some of you that are in the private class are going to be far ahead of those that are not. So you definitely understand what I'm talking about. Now, one of my game plan is to find out the range. I don't know if many of you do this, but this is necessary. You can use this in any chart. Go to any chart, BTC or Euro USD or whatever you trade. For me, I trade Nasdaq, so I'm going to use this and demonstrate it on Nasdaq. So first, you want to find out the range. Now, what do I mean by range? You want to find out the external low and the external high. That's what you want to figure out first. So where's our external low? Looking at this, for those of you who know what an external low or an external high is, an external low is a low that takes out another low, while an external high is a high that takes out another high. You can write that one on your notes. It might come in handy sometime in the future. So first, these are an external low. You can see that, and these are external high. You can see that. Now, from the explanation I just gave, why are those my external lows and highs? You can see this low is taking out lows, while this high is taking out highs. This low is not taking out any low, so you cannot use this low as our external low. And all of these highs are not taking out any high, so you cannot use them as an external high. This is the high that caused all of this movement, the beginning of all of this movement. And this is the low that's the beginning of all of this movement. So figuring out your external high, your range, your external high and low is the key thing, the first thing to understanding daily bias, what the next week might do, right? So you can do this on any of your pairs, but just look at how I'm demonstrating it and just replicate that. Now, what I use is the GAN box, or you can use Fibonacci. I want to find out the premium and discount or the equilibrium of this range. So first, I'll use my GAN box. I have modified my GAN box to look like this. You can also modify yours. Let me show you the settings. So you can see, you can pause the video and zoom and look at the settings of my GAN box. You can see that, look at it very well. That's it. You can modify yours to be like that. Now, so this is our equilibrium. The middle line is our equilibrium. And now we are waiting for price to what come to the discount before being bullish. Price have created a range. What does price do? Let me show you a diagram of what I'm trying to explain. So this is a range. Price drops an external low and drops an external high. Now in this range, you have what? You have the premium and discount. Now, if you are looking to buy, you don't buy here. This is absolutely wrong. For any trader, for any analyst, you don't buy. Sorry, this is not the tool I wanted to pick. You don't buy here. You don't buy here. You don't buy any of these levels. You don't buy there, right? You don't buy in any of these levels. As an analyst, I think you should know that. What do you want to do? You want to buy at a discounted level. It's almost like economics. It's very, very simple. You want to sell to the discount level, and when price gets to the discount level, you do what? You buy. Now, this is where the problem comes in, because most of the times price could just come down to the discount and break this low. This is only when you have a market structure shift. This is telling that the order flow has changed from bullish to what? Bearish. Now, for now, if you backtest Nasdaq for the past 3 or how many months now, price have been doing this exact same thing. Find out the range on the 4-hour time frame and find out your premium and discount, and you see what price is doing. With your pairs, the same thing is on DXY. We'll look at that. Now, another question is, where is price coming to? Once price starts going to the discount, where is price coming to? That's the catch. Now you go to the 1 hour time frame. At this point, I don't want to look for if I don't want to look for a draw on liquidity on the 4 hour time frame because I'm a day trader, right? So I'm going to the 1 hour time frame. Now, what am I looking for on the 1 hour time frame? I'm looking for a draw on liquidity or a PDRA that's in the discount. So we have this on the discount. We have, you see, multiple lows. Those are relative equal lows. Some people might mark them as a trend line liquidity, or I don't know, as inducement, but that to me, that's just a sell side liquidity, right? To me, that's just a sell side liquidity on the 1 hour time frame. So once price reaches that, you're expecting price to do what? To start tackling this other high. That's it. That's our buy side liquidity. That becomes what? Our next target. That's where price will start tackling that high. Now, so looking at this chart now, looking at this analysis, what are you expecting next week to do? You're expecting next week to start buying to what? To this high. Now, if price gets or reach that high, you have a new range. This becomes the new what? This becomes the new external low while the newly created high become the what? The new external high, and so on and so forth. Now, even next week, remember all the things we're doing, all our analysis is based on probability. So there must be the statement if next week comes down to break this external low, this is telling us that market structure as a whole have shifted from bullish towards to bearish. And at this point, we are now looking at this external high and the newly external low, and we'll be looking at price to trade to the premium before actually selling. I don't know if you understand that, but I'm going to upload this video so you can watch this particular video and use it to study for the weekend. Let's look at dollar index. So it doesn't mean that I'm only doing it for Nasdaq, right? So on the 4-hour time frame, looking at dollar index, right? Where is our most recent external low? We have this external low there, and we have this external high. That's an external high because it has rated this high. Now, what are we doing here? We are looking for our premium and discount. You can actually backtest this. Do it further. Like you can go on for month and month and month, and you see that it's actually the same thing. So this is what we're expecting on dollar index. Where is our draw on liquidity? We go to the 1 hour time frame and find a draw on liquidity that's in the discount, right? Sorry, let me remove this indicator. We find a draw on liquidity that's in the discount, and we have this outside liquidity there. So it might not happen, you might not know when it will happen, but dollar is actually coming for this outside liquidity. Once it gets that, it turns to the bullish direction. If it breaks this low, it becomes what? It becomes bearish, or that means other flow have changed. Now, if you look at the previous chart, right? Let's look at the daily time frame. Let's erase that and look at the daily time frame, what dollar have been doing. You see that this thing is fractal, it works on any time frame, right? Okay, so looking at this range, we have an external low and we have an external high. Did you see where price come to? Price came down to this discount, rated I think there's a fair value gap there if you go to the 4 hour time frame, rated a fair value gap, and it's bullish till it's get, this is now a target. So whatever you're doing on the higher time frame, like I said, you cannot use the daily time frame. This is the daily time frame. You cannot use the daily time frame for a daily bias. You only use it for a week or a monthly bias, right? So whatever we're doing, you're expecting dollar to read this high or to sweep this high first before we are actually long-term bearish in dollar. So if anybody tell you that, oh, dollar is long-term bearish, no, dollar is long-term bullish. This might take days, this might take months, but that is our original target. Now, once price comes to this level, this becomes the what? The new low. Once price comes to that level, you are looking for what? The same thing on the lower time frame. As we're not using the daily time frame, we're using the 4 hour time frame because what the chart is fractal. Let's look at this. So from this low, which is our external low, to this high, which is our external high, what did price do? You can see price came down to the discount. After coming to the discount, what happened next? You can see there's a draw liquidity there on the discount. This is a relative equal low. I've done this thing over and over again for my private students. They're already used to this. Trust me, they can explain this thing to you like they are explaining to a 5 years old. You get. So this is relative equal low in the discount. Once price takes that out, this thing is not random. It goes for the next high. The same. This is the 4 hour time frame, and it's exactly the same thing I'm waiting for what on the daily time frame. So it's fractal, right? The way it happens on the lower time frame, the same way it happens on the daily time frame. Now, this is exactly what we are expecting for that. So you know what we are expecting for dollar index, right? We are expecting dollar to trade to the discount, and for Nasdaq, we are expecting Nasdaq to go to what? To the external high. Now, will next week start bullish? Actually, I don't know. I can't tell because next week might come and start reading this low, and that becomes another flow change. It's actually something a lecture I haven't dropped yet, but I want to drop for my for the private students, the mentees, I think in the before the next 2 weeks. This particular lecture is the opening range setup. Now I'm telling you this because you can actually find this particular lecture or this setup from one of ICT's videos. I don't know which core content or which month or which playlist the setup is in, but I actually found it in ICT video. I studied it for weeks, and I had my own method out of it. I created my own method out of it. Now, the one thing I like about the setup is like it can be a setup for life. I believe some of you have actually watched ICT Silver Bullet. Some of you have watched ICT's 222 mentorship. Some of you have watched ICT's 223 mentorship or their core content or some other things. This particular setup, to me, if I was asked which setup will you take or which setup can you use for life, just one setup for life, and that would be the setup. I've never taught this particular setup, not on my YouTube, not to the private students. It's one I use secretly because the how will I put it? The markings, people don't relate to the markings. If I post the setup like on Twitter or my status, people think or people will say my chat is not professional. But trust me, this particular setup is 80%. I'm not here to look professional. I'm here to make money in the industry. But as I think that's where people get you wrong most times. They think you need to make your chat look very professional. You need to be marking up and be annotating all these BSLs, MSS, and whatever BOS. OB and all of those things. You need to mark them right. You need to put your entry right and all of those kind of things, make it look textbook pattern. But I'm not really here for all that. If I see my setup where it's supposed to trade to a favorable gap and I missed it for even a second, I'll still enter that trade. It must not be at that favorable gap that I enter the trade. Sometimes I let price trade into my favorable gap and start going to my direction before I enter. It's kind of, how would I call it, a two-factor authentication code. That's how I'll put it. It's kind of like a 2FA code, right? You have a favorable gap. For example, you have the OTA, classic OTA, or the simple entry model, right? Price breaks a low. Now you're expecting price to trade into a favorable gap before actually selling. This setup happens almost every day. Trust me, guys. This setup happens almost every day. So let's say there is a favorable gap there, right? So many people want to pick the classic setup like this. Many people want to pick the classic setup like this. Post here. I think I took this kind of trade, but it was a buy this week on Wednesday, and somebody was correcting me on Twitter. I could not even mind him. Many people want to pick the class effort like this most of the time. But what you don't know is that sometimes price squeezes into this favorable gap and keep going further. So what do I do? I use my 12 code. I want to see price start coming down. Price start coming down, that's when I'll enter with a market order and put my stop loss somewhere above there. This is how most of my trades are. While some people you want it to make it look professional, you want it that value gap and all that. So you have to create a unique pattern for yourself. You don't need to listen to anybody. That's why most of the times I keep telling you guys, you need to block out the noise. Study this chart like your whole life depends on it. You know why you choose to become a trader. You know why you wanted to make money from trading, why it's so introverted. You know, like trading does not require any third party. It's just your broker, you and the chart. That's everything. You know why. You have your why. Maybe to help your family, maybe to become rich someday, or maybe to oppress people. That's your own reason. I don't care. But what you need to do is that you need to study for you. Yes, you encounter losses. Yes, your strategy will hit drawdowns, but how you well handle these situations is what defines you as a trader, right? So don't listen to anybody. Sometimes I enter my trades like this and people say, oh, you're not doing it right, you're not doing it right. And I feel like, you are the one talking and I'm the one making the money. So it doesn't really matter, right? You just need to figure out your edge, have your edge, put your strategy in place. Now, this is my own go-to strategy. This is my own edge for figuring out my weekly bias. Come back to this video at the end of this week, at the end of this coming week, which is second week of April. I think yeah, second week of April. Come back to this video. You see that price will most likely tackle this buy side liquidity. You might rate that buy side liquidity and keep going further higher. Like I'm expecting, not that I don't want, I'm expecting the coming week to be a one-sided week. There's a reason why. For those who are in the private class, you can check our pre-week game plan. We have a pre-week game plan for every week. You will understand why I want this week to be a one-sided week. Of course, if price breaks this low, then my bias change. One thing I've learned is that you don't have to be so fixated on a bias, right? You don't have to be so fixated on a bias. You can have a sell bias for the day. Sometimes it happens to me. I can have a sell bias for the day, but then my bias changes all of a sudden. That's when I use the opening range setup. I call it the OPS, and I think I'm going to drop that lecture for my students this week. So if you want to join, it's actually very cheap though. I'm not advertising or marketing it, but if you want to join, you can message me on Telegram or Twitter, right? So if you have any question, I'd like you guys to ask now. I'd like to answer at least 5 questions. I don't waste anybody's time. I'd like to answer at least 5 questions before I end this. For those of you that missed it or that was not able to stay to the end, I'll be uploading this particular backtesting session with on my YouTube channel, so you can watch it there. So if you have any questions, I'll entertain them now. Where don't you understand, or even if it's an unrelated questions to what we just talked about here, no problem. Okay, I have a question. Okay. Hello, sir. What make your setup be invalidated? Okay. Okay. What makes my setup invalidated? Well, let's say I was looking for a buy or I was looking for a sell. Let's say I had a bearish bias, right? And like a weekly power of three, you expect price to open, that's accumulate and manipulate and distribute, right? This is how almost every bearish candle looks like. You can look at it. I think if you think I'm lying, let's go to the daily time frame. This is how almost every bearish candle looks like. Like it must create a higher price first before creating what? Before coming down. Now look at Thursday. Look at this bearish candle. Price opens there. I don't know if you can see that very well. Let me zoom it very well. Okay, so you can see this. Look at this bearish candle. Price opens there, create the highest price, and actually start coming down. This other bearish candle to price opens there, creates a high price before actually coming down. So if I'm looking for a sell, I want price to do what? To create that high price. Now, what invalidates this setup if I'm looking for something like this? What invalidates this setup is if price takes out or manipulates and keep going for that. That's to say a one-sided day. That's the same thing that happened on Tuesday. So on Tuesday, I was looking for what? I was looking for a sell, but price did not take out any previous day high for me to sell. I believe you understand. If you watch the weekly power of three on my YouTube channel, you understand what I'm talking about. It's purely ICT concepts. The weekly power of three. Price needs to accumulate, manipulate, reading a high or sweeping a high before selling. Tuesday, on the other hand, did not do that. So that invalidates my setup. I don't know if that answers your question. Okay. So I have another question. Do you look at DXY while you trade NAS 100? Like, is there any kind of correlation between DXY and NASDAQ, just as you have it between DXY and Euro USD? Well, I'm not I'm not going to shade anything. I'm not going to lie to you. I'm going to be very open. I don't use correlations. There are a lot of things people use that I don't use. I don't use correlations. Some people use correlations. Some people use SMT, that's smart money technique, but I don't use correlations. The DXY actually is just there on my chart for me to know if dollar is going to be bullish this week, if dollar is going to be bearish this week. The thing about DXY and NAS 100 or Nasdaq is that it doesn't it doesn't follow the XY and it doesn't go opposite. I don't know if you understand me. Unlike Euro USD, that's if dollar is buying, you're expecting Euro USD will be selling, like opposite. But for Nasdaq, it's not just like that. It doesn't. If dollar is buying, Nasdaq too could be buying. If dollar is selling, Nasdaq too could be selling. But sometimes if dollar is buying, Nasdaq will be selling. So it's just like there's no correlation there, right? So that's I don't use correlations. I'll pass on to the next question. I have less than 10 minutes before I end the session. Now, the next question: what invalidates your external highs and lows? A full candle body break, or a weak break? What? Okay, so sorry, what validates your external highs and lows? Okay, some people, there are people who just mark out a low like this and pick themselves from there. But I don't do that. I must wait for a confirmation. So yes, confirmation validates my highs and lows. So if I'm expecting to sell from a liquidity, I'm expecting a liquidity sweep or a liquidity raid, anyhow it is. What I'm just looking for is that if price is sweeping that high, it must what give me an OTE or a fair value gap. It must displace down. If I was looking to sell and price reaches a high, it must displace down and create a value gap where I can enter from. I talked about this particular entry pattern on my YouTube channel, simple entry model. You can find it there. You can keep the question coming. Another question is, do you also consider SMT divergence between NAS 100, US 30, and US 500 as you trade Nasdaq? I think I just answered that previously. I said I don't use SMT divergence. I don't use that. I try to use it, but it's not something that I sit right with, right? Some people use it very well. Some people paint it to be the holy grail, but not for me. Once I'm looking for a buy, all I want to see is what? A displacement and a fair value gap. That's all. Once I'm looking for a sell, I think I got a buy on Wednesday. Let me show you guys. Wait. I got a buy on Wednesday. Price rated this high, and sorry, price rated this low. You can see that price rated this low. Let me show you. So price rated this low. My bias was bullish. Price rated this low, then displaced and created a fair value gap, and that's it. That's all. Displaced and created a fair value gap right there. So that was the entry. That's all I want to see. No SMT, no correlations, no any of that. That's all I want to see. Very clean setup. Works almost every week. If there's any other question, I'd like to entertain them now. If not, this will be the end of our session. And for those who have asked questions, I believe you've gotten your answer, right? No communication. Okay. Okay. I okay, you got your answer. I love that. Okay, so I think the reason I made this live session was actually because there was, I think, most of the people who wanted to ask questions. I'm even surprised now that even some of the people that wanted to ask questions are not asking questions. I don't know when next we'll have a live session like this. So it's better for you to, pour out those questions you have now, because I'll have no other choice than to end the session. Okay, I'm having a question here. Why don't you also do setups on gold using your strategy? Okay, that's a good one. See, the thing is, I've actually tried to trade gold. I've tried many setups. It's just that you don't you don't sit for what is not for you. You get. I've tried my strategy on gold. It doesn't just work. Maybe you can use support and resistance. You can use whatever trend lines on gold. That might work for you. But I don't trade that. So I've tried my strategy on gold. I backtested it for, if I can remember very well, 3 weeks in a row, and it's the win rate that came out on gold was very poor, so I had to drop it. I've tried my strategy on many pairs: Euro USD, GBP USD. Is anyone? I've tried even US 30. US 30 was the only pair that came close to follow my strategy, but at some point it just started doing going on its own, so I had to drop it and focus only on Nasdaq. I've been trading Nasdaq for almost 16 or 18 months now, and I can say I'm very used to the behavior. As I tell people that if you can just focus on one pair, give it your all for months or for years, at some point you get used to it. You know when it's tricking buyers and you know when it's tricking sellers. You might not know fully, but sometimes you know when to avoid some of the errors in your pair. Now this is the guideline. I wanted to mention this. I want everybody to write this. So as a day trader, this is a simple guideline to intraday trading. I think there's a video on my YouTube channel where I talked about calibrating your charts. So you can watch that video so that this will make sense. Now, for a day trader or an intraday trader, if you are looking for, or let's say if price is not below midnight opening price, don't buy. That's one. Two, if price is not above midnight opening price, don't sell. It's kind of general, it's a general guideline for every intraday trader out there. You're looking for a buy or you're looking for a sell. Let's say this is the opening price, which is the accumulation. If you're looking for a sell, if price is not above the opening price, don't sell. Don't sell. If price is here and you, let's say you come and sell here, it's going to be very, very brutal for you. Sorry, if price is here, right, and you come and sell at this point, it's going to be very brutal for you because most of the time this is what price does. So if you are looking for a buy, anticipate price to come below the opening price before you buy. If you want to pick a buy or you want to pick a sell, look at your opening price. Outline your opening price, the midnight open. That's Let's calibrate your chart to New York time zone, of course, ETC -4. Now, if you are looking for a buy setup, first draw out your opening price. Check that buy setup you want to take. Is it below the opening price? If yes, then that buy setup might just be a correct one. If not, you might likely lose that trade. You want to sell, is it above the opening price? If yes, you might likely win that trade. That's a simple guideline, right? And let me answer the last questions here. And thanks for explaining the trade you took on Wednesday. I love it. You're welcome. It was the only trade I took last week. So if I had taken a lot of trades, you can see that particular trade I explained there on my Twitter handle. Actually, if I had taken a trade on Tuesday, there was no need for me to hide it. You are very valid. I tried using your strategy on gold, but like you said, it was not just coming through. Thanks. You're welcome. You're welcome. I'm not going to advise anybody to use the strategy on gold, right? There's a whole course, I think 30 videos of that about on of my strategy on my YouTube channel. You can find it there. But it does not just correlate with gold, so don't try it. Just focus on Nasdaq. You can add US 30, but US 30 has a low win rate on your strategy. Nasdaq, on the other hand, has a high win rate.